You might be preparing to purchase a condo or a townhouse, but have you ever thought about the financial stability of the development you will be joining? Well, in this video, I will tell you the 5 questions you or your representative should be asking a homeowners association prior to submitting an offer on a condominium or townhouse. Hi, my name is Camille Haynes, and I'm a real estate agent with eXp Realty in Union County, New Jersey. Preparation is key whenever you buy a condominium or a townhouse because you're considering purchasing a property that is part of an association. There are additional layers you have to consider that are not typical when buying a single-family home or a multifamily property. You should not solely look at the space and the condition of a condo or townhouse and just fall absolutely in love. Savvy buyers are also making sure the development they are buying in is financially stable. You might be asking, why is this important? Because as a potential homeowner in a development, you can minimize your risks of the HOA fees drastically increasing by avoiding a financially unstable HOA. So let's run down the 5 financial related questions any buyer should discover the answers to before placing an offer on a condo or townhouse. Number 1, what services do the fees cover? What don't they cover? Well, I think this is rather simple to understand the importance of this question. What do your fees include? Does it include utilities? Does it include parking, or do you have to pay extra for parking spaces? Does it include a detached garage space, or are those separate? Does it include usage of the clubhouse, or do you have to pay to rent it out if you want to have a party? Having a better understanding of what the fees include can help you with budgeting for your future. Number 2, how often has the HOA fees increased in recent years? What are the maintenance fee delinquency rate for the complex? These questions really look into if your fellow homeowners in the development do their fair share of paying on time. If the monthly fees are increasing frequently, for example, yearly for a continuous number of years, that shows a potential issue with the homeowners association, which typically boils down to one of 2 things. 1, a fair number of unit holders are not paying their monthly HOA fees and are in default. Or 2, the vendors that service the association, like the lawn company or the snow removal guys, are continuously raising their fees and the HOA is passing on the cost to you. Mind you, it is okay for a homeowners association to raise fees, especially during these days of inflation. But if it is multiple years in a row with increasing fees, that might potentially raise a red flag, and you have to be prepared for the chance that your current HOA fees will continue to increase. Number 3, does the HOA have a reserve fund for long-term repairs and maintenance? And if so, how much is in it? And what percentage of the monthly maintenance fee is placed in the capital improvement fund? Think of the reserve fund as a piggy bank. How much money does the homeowners association have in their piggy bank for major repairs? If the HOA does not have any money set aside for a rainy day, well, expect it to pour on you during a thunderstorm. What do I mean? If there is a major structural repair that is needed at the development and there is no money set aside, the homeowner should expect to pay an additional amount of money on top of their HOA fees. And this is also called a special assessment. And who wants to do that? Reviewing the HOA financial statements and annual budget will allow you to make sure the HOA has additional money set aside for major projects. Number 4, does the HOA have a history of charging special assessments? If so, how much were they? What were they for? And how often do they occur? To go a step further on number 3, Understanding if the homeowners association has established a pattern of continuously doing special assessments for larger projects instead of using the funds that are already saved within the reserve fund can indicate that the HOA has a difficult time of saving money. Your hope is that the complex you are purchasing in does not have a cycle of solely completing major repairs through special assessments. When a special assessment is charged, you have to budget for a higher monthly association cost for a specific number of months. For example, if the HOA needs to complete a roof replacement for the roof within the development, if there is a special assessment, instead of the HOA having money in the reserve fund, you might have to pay, for example, an additional $100 a month for 36 months to pay for your portion of the roof replacement. Number 5, has the HOA hired an expert to conduct a survey study that estimates how much money should be saved to cover the expenses? Has the association ever taken the preventative step to make sure that they monitor their spending habits, or are things moving as status quo? In the state of New Jersey, you have a time frame once your offer is accepted to allow the attorneys to review the contract, and once the attorneys are in agreement with the terms, the property, it is officially under contract. This is called the attorney review period. You want to make sure that you have the opportunity to get the answers to these questions at the absolute latest before the home is under contract. If you receive the answers after you are under contract and you are not satisfied with the answers, you will not be able to cancel the contract unless it is specifically stated during the attorney review period. If this information is not specified on the financial statements and or on the annual budget, have your attorney or agent to reach out to the other party to obtain this information. In addition to checking the financial stability of the complex, you should also check the financials of the unit you are purchasing. They include verifying the amount of the maintenance fee for the unit and what do they include, and verifying that the maintenance fees are up to date for the unit by the current owner. Getting answers to these questions will give you a basic idea of the financial stability of the homeowners association that you're buying into. And it is important that you directly complete the due diligence on this research. If you are not a numbers person, then make sure you get a numbers person on your team, like an accountant, to review the financial statements with you. After reviewing, you will be able to determine if the fees will remain stagnant, or if an HOA will continue to increase their fees, or if you could incur a special assessment during your ownership period. But it can also give you the confidence that you need to know that you are purchasing in a fiscally responsible development, and that is what you should be striving for. If you have any questions, please feel free to reach out to me. My name is Camille Haynes, and I'm here to help you navigate the process of buying or selling your condo or townhouse. Take care.